Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek, insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
Nvidia kicking off trading today at the open with a nearly 3% rally, only to see it run out of steam. The stock right now down more than 4%. The chip maker, it's at the center of the AI spending boom, delivered good but not great quarterly numbers, disappointing investors accustomed to blowout results. Company also, Tim, warning that gross profit margins would be tighter than anticipated as it rushes to roll out a new chip design called Blackwell. It's something we talked about a lot with our own Mandeep Singh.
We were all over the results last night, but we did want to follow up, especially as we've seen Nvidia shares trade all over the map since the company reported. Our go-to, Ian King, he's U.S. Semiconductor and Networking reporter for Bloomberg News. He joins us from our San Francisco bureau. Ian, Nvidia is still selling a lot of stuff. Is the disappointment playing out in the share price today about the lofty expectations that are still out there? Because we saw shares rally at first.
Yeah, I mean, this is, by any other company in the sector's standards, a fantastic report, and it's kind of where they would love to be. But by Nvidia standards, it's kind of great, but not fantastic, right? I mean, we're up, we're on a quarterly revenue run rate that was an annual run rate just a couple of years ago. So not a lot to complain about in terms of the numbers, other than to say that they're not as fantastic high increments as they used to be.
I mean, C's first quarter revenue, $43 billion, as you say, Ian, by any other metric, or any other, kind of read. They do say plus or minus 2%, but get into, a little bit more of their expectations with this one. And I do wonder, as a company in this AI cycle, is this kind of an expected lull or slowing of growth and maybe more pressure on margins, especially when so much of your business is in the handful of a few companies, big hyperscalers? One would expect that they get some deals on buying all of those chips.
Yeah, I mean, you're pointing out a few of the key concerns that investors have, and there are others, and those were certainly brought into focus coming into this earnings report. But it was like, Jensen Huang, the CEO, and his CFO, Colette Kress, had done their homework, and they basically shot down everything that people were worried about as part of their presentation. You saw the stock trade up, actually, after hours yesterday, and everybody was happy for a while. There's the ongoing concern about margins, but again, they were like, oh no, it's going to be okay eventually, don't worry about that. So there was really nothing to seize upon on a fundamental basis here. It's more a case of we're used to 1 billion, 2 billion blowouts, and we didn't get that.
What about concern being put to rest when it comes to DeepSeek? This was the first report that we got from Nvidia since the DeepSeek mania kind of sent the stock lower. In fact, Nvidia not even recovering to where it was before that news came out. Ian, did it put investor concern to rest there?
Yeah, I mean, this was a classic performance by the CEO where, the concern is, we're going to move to cheaper gear. We're going to move to, we won't need the high-end stuff that Nvidia produces perhaps as much. And he flipped the script and said, look, what DeepSeek does is, it creates this enthusiasm and this flowering and this spreading of use of AI. And guess what? Our chips are the best of that. And he gave this elaborate technical explanation, as he tends to do, and sort of put that one, back in the box. And I think did what was a well-received explanation and dealing with that and arguing, well, hey, this actually helps us rather than hurts us.
What about in terms of how, you know this too, right? We were all talking about as we waited for the call, like what words would he use to describe the type of demand that's out there? He said, we will grow strongly in 2025. Demand for Blackwell is amazing. Like, was there any tea leaves or anything that you, for someone who really parses and goes through everything that we get out of this company, was there anything that you detected that said, maybe this is, a different word, a different indication of maybe what demand is or what the business is right now?
Yeah, I mean, the way I think that he addressed that was to say, look, I'm happier now than I was 3 months ago. That's the answer to your question. People were picking away at what he'd said. Which adjective was he using, and how did that compare to what he'd previously used? But he sort of said, look, no, I'm happier than I was.
The big thank you to Ian King. He's Bloomberg News semiconductor and networking reporter. joining us out there in our San Francisco bureau. It is the epicenter of technology, but sometimes, Carol, the tech doesn't work.
Yeah, listen, hey, welcome to our world. Sometimes this happens. We did want to point out, though, that there is a great story by Ian and Matt Day on the Bloomberg about Microsoft, Amazon, and Nvidia urging President Trump to revise the chip export curve, something that we know has been playing out this week and something we continue to watch, and certainly Ian does. So we'll keep an idea. I mean, keep in mind, these companies, mega big players, a market valuation of over $8 trillion, talking to the president and his administration about this.
Yeah, check this one out on the Bloomberg terminal, because Ian and Matt write that in rapid succession today, Microsoft's president and Amazon's CEO both said that the Trump team should reconsider Biden-era regulations that would cap the export of AI semis to nations including Israel, Saudi Arabia, and the UAE.
I got to say, this is really important, and it ties together some of the economic watch that we've been on. I mean, listen to this, everybody. Almost 60% of U.S. adults expect President Trump's tariffs will lead to higher prices. This is according to a Harris poll conducted for Bloomberg News. Some 44% say the levies are likely to be bad for the U.S. economy. That compared to 31% who said they'd be a boost. So let's tie it all together. We've got some thoughts on higher prices, inflation, U.S. economic growth. With us in studios, Bloomberg News economics editor Molly Smith joining us right now. Hey, a lot to get to and a lot to tie together. First of all, I do want to start with the backdrop, backward looking, but GDP today. Good news once again in terms of U.S. economic growth.
Yeah, we weren't expecting too many revisions out of this. So what we got today was the second estimate that the government puts out on fourth quarter GDP. So we'll even get another one. So just in case
this is
the picture,
a boring one, I feel like.
Yeah, and I mean, look, you never know.
Yeah,
sometimes there could be something interesting. I mean, in the next one, we'll actually get our first look at corporate profits and gross domestic income in the period, which a lot of people like to look at those metrics more. But if you're looking at, the basics of GDP, consumer spending, and inflation, actually, that was really more where the big surprise was in this, was that the underlying measure of inflation, this is the PCE measure, that one actually rose more quickly at the end of 2024 than was initially reported. So definitely adds to the idea of what we're going to now talk about, I think, in your next question, perhaps, where inflation is going and why it's still heating up again. Here we are in almost March.
Right.
And at the end of 2024, it was still bad news.
Yeah, that's exactly where we're going, because tomorrow, big economic news,
Yes.
Of course. We get the Fed's preferred inflation gauge. We get the sense from a lot of people, including you, that the conversation is now shifted to inflation being more sticky, for sticking around longer.
Yeah, the thing is that we've all been waiting for really. Shelter is such a huge part of this story for housing costs to come down, and because that obviously is such a huge expense for really all American households. And that is where some of the most persistent strength has been, and especially when you're looking at the core measures that exclude food and energy. But hey, it's not like we're excluding food out of our everyday lives. Groceries are expensive. Obviously,
right.
Eggs are a huge part of that story right now. Broader grocery prices, not as quite as actionable as what's going on in the egg world with bird flu, but it's still just generally you're not really getting as much deflationary or disinflationary sources in the broader scope of goods and services.
Why is it still so sticky? I get the egg thing. We understand.
Yes.
And there's just different stories. We all come in with our stories about not being able to get eggs or how expensive they are. So why, though, overall? Is housing just because it's going to take a while? Like things like that kind of stay, you sign a lease, you buy a home, like some of this stuff.
Housing is a very structural story, and that there's just going, even if we are able to, get, let's say rent growth really does come down and that prices are maybe better under control for whatever reason. Let's say your landlord is just kind and does not raise your rent by as much. There still is the structural shortage of housing in this country in so many areas. And there's actually a great story today out of our Texas bureau about what's happening in Austin and how there's this huge, a boom in construction in there and how that's really finally led some rent measures to really come down. Mm-hmm. And it really is a supply and demand story, though, across the economy that, housing is really, of course, the most pressured source of this. And with housing too, in particular, just because of how home prices and, migration patterns have pushed housing prices up over the years, just looking at when we look at these different buckets of home prices and when you're looking at ones that are maybe in the 1 to 200,000 range, 2 to 4, and it's there just really aren't that many houses, really, no matter where in the country you are, that are priced at that level anymore. Maybe those homes used to be in those buckets, but everything's just kind of shifted up. And that's really in housing the problem. It has all just really shifted higher, and it's hard to see without just a really big boom in construction how that gets reversed.
That's not a problem the Fed can solve.
No, they can't build houses.
And Jay Powell's talked about that.
Yes.
He's talked about that a lot over the last few years. So is there a chance that the next Fed move could be a move higher?
I think if that were to happen, there definitely is some betting activity on that.
Right.
I don't know if that's necessarily a 2025 event, but that would be, there'd have to be some really more marked turns in what's happening in the inflation picture right now. The thing is that Fed officials still believe that inflation is on a downward trajectory. I mean, they of course acknowledge that right now it's been stalling out for several months and that this is not what they would like to be seeing. But I don't think the way that they're speaking about it, they are not getting the sense that inflation is generally reversing progress. But that is, I think, right now the idea is that is in danger of happening.
Yeah, it's just kind of interesting because I think about if interest rates come down, people can buy houses, then there's still more demand for things. And then that puts pressure on, I don't know, goods and it just feels like we're in this really kind of rough little cycle right now.
It's just hard to see where disinflation would come from next right now,
right?
Especially with tariffs on the horizon and like what that will be meaning for the goods picture, because goods right now as compared to services, that's really more where disinflation has happened when you're just buying physical stuff. Services have generally been what's been more the persistent source of inflation. Housing, of course, being part of that.
So if economic growth slows down, could we assume that inflation will come down, or that's not a guarantee?
Definitely not a guarantee.
Okay.
Because, that's really more the big concern that I hear coming up more and more is seeing that stagflation word. I know, I hate to say it on the air. It makes it kind of more real. But but I'm hearing definitely more of that.
All right. Good stuff. Glad we could talk to you. And don't forget, we've got that important inflation print, right? Tomorrow morning.
8:30.
All right. We'll be there. Bloomberg News economics editor, Molly Smith.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
I think top of mind, too, for a lot of folks out there is the state of democracy around the world. The quality of democracies worldwide is actually at an all-time low. This according to the Economist Intelligence Unit's annual Democracy Index. Here to explain and break it down is Constance Hunter, Executive Vice President and Chief Economist at the Economist Group. It's a global media and information services company, of course, home to The Economist magazine and online media service. Constance joins us from Wellington, Florida. Constance, what is the Democracy Index that you keep track of? How is it measured?
Yeah, sure. So we look at 5 major factors, right? So we're looking at is there plurality? Is there access to voting? Is there participation? Is there free media? Is there access to information? So we score it across these dimensions, and that's how we come up with our democracy score. And so, really digging under the hood of the index, we can see different regions had different outcomes. And of course, we've been doing it for 20 years. So we have a nice longitudinal data set.
So what did you guys find out? And I'm curious, well, I'll follow up. But so what did you find out in terms of democracy around the world? Not so great, right?
Well, the title of the report is It's a Democracy Recession. And that's actually been going on for several years, right? It really started in earnest in 2016, and it's been picking up. And so there's a couple of things to say about this. The worst countries, the lowest ranked countries, keep falling, and they fall at a faster rate than the improving countries improve. So if we take the worst 20 performers in the index from 2006 to now, they fell on an average 2 points. If we take the best performing countries, those that improved the most, they only improved by 60 points, or 0.6, right? 0.6 of a point. And so it's a very skewed situation. With that said, if we look at the top 20 countries from 2006 to now, it's a very stable group of countries. There's a few countries like France, for example, that sort of float between democracy and flawed democracy. But in general, that's pretty stable. The issue is when you start declining from flawed democracy into hybrid regime. a lot of countries then just continue to slip down because freedoms are removed, access to voting is removed, access to information is removed. So Hungary would be a key example of
Constance,
that.
I want to jump in because we only have 30 seconds left. You use the term a democracy recession. It implies that we're in a cycle and it could get better. Is that indeed the case? Just 20 seconds.
Oh, I love your optimism. Yes, I do think it could get better. There's a lot to combat. We have to combat disinformation. We have to combat access to information. But the fact is that people want to participate. And the one thing that's gone up since the beginning of the index is this participation index. It's been flat for the last several years, but I think that there's scope for it to go up.
All right, Constance, thank you so much. Constance Hunter, Executive Vice President and Chief Economist at the Economist Group.
This is the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Another stock that's on the move today is ticker mRNA. It's Moderna, and that is down about 5.5%. U.S. health officials are reevaluating a $590 million contract for bird flu shots that the Biden administration awarded to Moderna. People familiar with the matter said this is a Bloomberg exclusive, by the way, that moved shares of the company. The U.S. is in the midst of a record-breaking bird flu outbreak that's affected dozens of cattle herds along with poultry flocks nationwide. Carol, it's sent egg prices soaring.
Yeah, it's something we've been watching, especially when we saw that the Trump administration canceled an upcoming meeting of the FDA's Vaccine Advisory Committee, a move that could complicate efforts to produce flu shots in time for the upcoming season. There's a lot going on here. We're going to kind of throw it at Jenny Rooke, who is back with us. Hello.
Hello.
She's the founder and managing director of Genoa Ventures. It's a VC firm, invests in, as she says, the quote, next generation of companies at the convergence of technology and biology, which Tim and I are really, really interested in. The administration, first of all, important research gets done, gets funded, things come out of the government that goes to the private sector. There's concerns about maybe we won't have so much focus on vaccines and viruses. I'm not speaking out of turn here. It's just the narrative around this. How do you see it, and how do you think it impacts developments in
Indeed.
your world?
Yeah, so a lot has changed since we last spoke.
Yeah.
And a lot of open questions on all of these axes that affect how science gets prioritized, funded, how those innovations come out into the private sector, impact people's lives. Certainly, I don't think any of us have the answer right now, but all watching those different moving parts.
Will it slow funding, though, or will it result in maybe not creation of companies that are looking to do, create, whether it's in different types of pharma, biotech, ag tech, if you will, or do you think the private sector will continue to do their thing?
I think each has a role. Right?
Okay.
The entire enterprise of kind of biology and technology-based companies is a giant public-private partnership. Right? And if you think about any of the companies today whose stocks we're tracking and who are marketing products that affect people's health, that science usually didn't start within the company. It usually started in a university setting, possibly in a startup, right, where there are the incentives to explore, discover, invent.
So let's talk about that, because also out today, by our own Jana Laurit and Amanda Albright, Stanford is implementing a hiring freeze due to the threat of severe funding cuts from the Trump administration. The Trump administration's proposal to curtail research funding from the National Institutes of Health would reduce Stanford's funding by approximately $160 million a year. There are a lot of folks out there who say, Stanford's got enough money. They can pay for their own research. Do you see this directly affecting the way that startups come across research?
I do. I think regardless of whether it's a very well-funded private university or one of the state schools, regardless, if you suddenly have a big hole in your budget, which all of these institutions are now facing, regardless of how big that budget was, they're facing rapid changes and tough decisions. Right, so it perhaps can they recover over time, but that's not a decision they have today.
I will say Stanford's endowment is valued at about $38 billion. So $160 million is, yes, a lot of money, but the endowment's huge.
So there's a lot of capital in the space, but again, kind of the shock to the system.
Okay.
Right.
If I took away, 10% of your budget, mine is not 38 billion, but if you took away 10% of it, then I'd have to make some tough choices about what I could do.
Shock to the space. So maybe over time, there are other venues that come in. And I think about years ago doing a piece on Johnson & Johnson and out on the West Coast, and they kind of had a lab where inventors, startup companies could just kind of play around with things, and they could utilize J&J expertise,
That's right.
Equipment, and not beholden to J&J, but J&J had an opportunity to look at this stuff and decide to work with it. Should we have more of that model where the private sector provides the lab?
It's a great example, and there are many examples of public, private sector, publicly traded private sector, reinvesting the profits of those businesses back into innovation and new products, which is then becomes their growth engines. But generally, those are very focused on specific solutions that are consistent with their business strategies. So you don't get the kind of blue sky exploration and understanding of science that may lead to the discoveries like CRISPR, for example.
Right.
Like CRISPR wasn't going to happen in one of those commercial settings. That needed to happen in a place where scientists were interested to understand the fundamentals, and then that could become a wave of market-based innovation.
Is there an argument to be made about, it's tough. I'm not getting political here, but there's this whole idea of America first. Is there an argument to be made that it would actually adhere to America first to support funding at these universities, because then that funding could be used to support companies that could then be the leaders in the industry?
I think that's generally the case that I'm seeing being made for.
It's not working.
Why, right? Well, it has worked in the past to fund universities, the national labs, these other centers of scientific and technology excellence,
right?
And then the translation of those innovations over time into products which grow the economy. And so there is a direct pipeline and decades of data supporting that. But to your point, it's not the only source, right? And so what we're seeing right now is a lot of shifts in the relative importance of these different inputs, which can be very tough for incumbents, but is a exciting time for startups.
And maybe venture capitalists too.
Potentially.
Well, exactly, right? It's an opportunity for you folks to commit money. Tell me what you're doing and what's of interest for you right now.
Yeah, we certainly know that a great time to invest in venture and startups is in the midst of an extended downturn, right? Because that's where you have a lot of leverage around terms and pricing. You have a lot of long-term thinking. It can be challenging to.
It's not expensive, indeed. It's less expensive.
It can be. It can be. But it also really selects for, I would say, the stars of the show, who are the founders and entrepreneurs and innovators who are on fire to solve a problem with their innovations. They're going to do it no matter what. And finding that in these challenging times, they really stand out.
Who's on fire right now? Like, tell us like what where you've committed recent money. Yeah. And I know it's early,
right?
But I am, Tim and I love kind of talking about, germinations of things that are going to be maybe something we're talking about in years to come.
Well, one of the things we love at Genoa is the picks and shovels. So regardless of whether you're making the next drug or the next crop, or as we talked about last time, animal-free pet food,
right?
You need the tools to both discover and shape, in a sense, manufacture that biology into a product. And so those picks and shovels that everyone uses, whether you're a big pharma or a startup biotech, those are products too. And there are companies that come along and figure out what's a better microscope, what's a better tool for these companies to use. We love those, and we're certainly investing and continuing to invest in those.
It also seems like you're going after companies that are developing use cases as well. So, for example, an AI wireless seizure monitoring company that's out there.
Yeah.
What I've noticed about the companies that you shared with our producer, Paul, is each one is an AI, not even AI adjacent, but it's like
it's embedded. It's table
really
stakes.
is.
If you're not incorporating it into your solution, you're going to get left behind.
Is that true with biotech?
Yeah, that's true. That's as your previous guest was saying, it's all about the data and the data that you use to come up with insights that drive your business, and that's true regardless of what kind of business you are. But biology is characterized by large amounts of complex data that are really hard for human brains to understand. So the use of AI tools to get through all that data.
This is one of the companies, AI wireless seizure monitoring.
Yeah.
Like, what a great tool.
It's so amazing. I don't know if you've ever seen someone who has a seizure disorder.
I have in the workplace.
Yeah, okay. And if they go in to try to understand what's happening for them and how to get care, you've got kind of pads all over them and wires everywhere. It's a very artificial environment. We talked last time about the wearable things like watches. Right. So this kind of takes that to the next level of getting the next level of data that can inform how you're thinking about something as complex as a seizure, when it's going to happen, maybe how you can even intervene.
Talk to us about being optimistic in an environment where we see chronic disease taking out so many people each year. Do we indeed live in a world where within our lifetimes we're going to be seeing a huge improvement in quality of life, extended life as a result of tech?
I think we're already there. As part of the optimism is if you rewind.
It doesn't seem like we're there now.
But if you look at what was happening for lifespans even 50 years ago, right? Quality of life, the ability to access healthcare, the ability to access better food, those spaces have been just absolutely revolutionized. Like even generations who are alive today can tell you about how difficult it was to just even access fresh produce in certain parts of the country. Right, that has radically changed, and all of that is biology. All of that is better informing how we use biology.
But I feel like
do I think that's going to continue? Yeah.
But there is also the whole idea that even during the pandemic, we saw life expectancy go down in the United States, not just as a result of the pandemic, but also as a result of fentanyl. And then you have in the U.S. a huge problem with metabolic disease, with chronic conditions such as obesity and heart disease.
That's a great example.
Does that get better?
It just did. We're living in this moment where billions of dollars of value have been created and lives are being changed by these novel drugs that no one could have conceived of even 5 or 10 years ago that are changing people's ability to manage their own metabolic state. It's amazing.
Is living through biology going to be better than living through chemistry? Which many would argue, I think at this point, how many decades later, that we've learned a lot. That chemistry doesn't always lead us to the best things.
I think there's no one answer, right? They all work in concert. Biology is made of chemistry, for one thing.
Well, that's why I'm like...
They're not actually separate, but it does bring us kind of new levels of complexity to both understand and then harness in solving some of these problems. I'm not here to minimize any of them, but I think we have some great examples of addressing them.
There's this, Make America Healthy Again movement that it's not a monolith, so I don't want to characterize it as a monolith, but there's a big part of it is we are too reliant on drugs to treat conditions, and we should be more reliant on preventing the problem before it happens through healthy eating, through sleeping better, through exercise. Not at all saying I completely agree with this approach by any means. But I think if RFK Jr., Secretary Kennedy, were sitting here, he would say, the answer is not when it comes to pharmaceutical companies. The answer is in being healthier.
Oh, well, I love this question because I do think we've seen a wonderful wave of innovation and lives impacted in better pharmaceuticals. Right? There are people alive today who just would not have been a decade ago. Right? That is happening, but it's not the only solution. So what else do you have to put around that? There's information, there's education. There's also, we think more broadly, the theme of precision medicine. So understanding for each person, what about your seizure disorder? What about your chronic disease? What's happening for you? And that brings in the tools of diagnostics. What's happening for this patient right now? Testing their samples, getting their information to make better choices, which maybe doesn't depend on a drug.
I would love to find a doctor who doesn't charge like a $5,000 monthly retainer to give me that information. Here in New York City, not so easy.
Not so easy. That's so true, right?
It's so true, yeah.
It's very difficult, right? So
it's extremely difficult.
Better tools in the hands of doctors, including AI-powered tools, so that they are getting the same benefits of monitoring all that complex data and making their decisions for us as patients.
It sounds like AI is going to be the thing that really changes medicine and kind of health and treatments going forward. Is there one thing, or is it just going to be a bunch of little tools, or like, well, how do you see it playing out?
I mean, we see impacts up and down the stack from at the end, like how it's delivered, how healthcare is delivered, such that a busy doctor who's got 10 minutes with a patient who can't possibly stay up to date on all this information can leverage those AI tools to be a better partner in the patient's health. So that's at one end. And then at the other end of actually discovering novel targets, interventions, diagnostics, and making sense of all that data.
Right.
Everything in between.
Everything in between.
Yeah.
Jenny Rooke, founder and managing director of Genoa Ventures. Thanks so much. Glad we could spend some time with you.
This is the Bloomberg Business Week podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.